Hey guys, welcome back to the Bitcoin Fortress podcast. Today is December 21st, 2025. We are at block height 928869, Moscow time 1132, and transaction fees are basically non-existent, 1 sat per VByte across the board. That combination alone tells you something important. Low fees don't mean Bitcoin is failing. Low fees mean the base layer is calm, efficient, and waiting. Meanwhile, above the base layer, everything else is in motion. Institutions allocating, regulators writing frameworks, miners adjusting to post-halving reality, and financial markets still trying to understand what Bitcoin actually is. This week didn't deliver fireworks, it delivered structure. And structure is what carries Bitcoin through decades, not weeks. Let's get into the news. Starting out with macro and market, Bitcoin as a liquidity mirror. First up from CoinDesk, US Bitcoin ETFs see strongest inflows in over a month. CoinDesk reported that US spot Bitcoin ETFs recorded their strongest inflows in over a month. This matters because ETF inflows are not emotional money, they're committee money. These allocations are often decided weeks in advance and executed quietly. When inflows rise but price stays flat, it usually means supply is being absorbed. This is how Bitcoin transitions from volatile asset to core allocation, slowly, quietly, and without drama. ETF flows are telling us who is buying, even when price doesn't tell us how excited the market is. CoinDesk noted Bitcoin chopping aggressively ahead of CPI. This reinforces that Bitcoin still trades as a macro liquidity instrument at the margin. Short-term traders react to CPI, long-term holders react to monetary credibility. Bitcoin doesn't care about CPI, but traders do. This distinction is critical for those of you trying to avoid over-trading noise. Next from investing.com, Bitcoin holds near 88K after softer CPI print. Despite the softer inflation data, Bitcoin did not rip higher. That tells us the market is no longer trading hope, it's trading certainty. We're in a phase where good news doesn't automatically mean upside. That's not bearish, it's mature. In early cycles, Bitcoin overreacted. In later cycles, it digests. Finance research emphasized thin December liquidity. Low liquidity environments amplify headlines and exaggerate candles. This is why experienced Bitcoiners ignore short-term December price action. Nothing structural gets decided in the last 2 weeks of the year. Next up, the Financial Times reported internal debate at the Fed over whether inflation is overstated. This is a profound signal. The people managing money no longer agree on what inflation is. Once inflation becomes subjective, monetary policy becomes political. Bitcoin opts out of this confusion entirely. It doesn't measure inflation, it measures scarcity. And of course, a committee, a small group of people deciding on the price of money is, on its face, ridiculous, given that it is and should be a market good. Next up, Barron's reported Bostic pushing back on premature rate cuts. Conflicting Fed voices create uncertainty. And of course, markets hate uncertainty, but Bitcoin feeds on it. Every disagreement inside central banking increases the demand for monetary alternatives, and Bitcoin is a great alternative. Next up, Business Insider highlighted concerns about stagflation coming up in 2026. I've heard that one before. Stagflation is poison for traditional portfolios. Bonds fail, growth stalls, inflation persists. Bitcoin doesn't need growth, it needs discipline. And this is exactly the macro environment Bitcoin was designed for. And perhaps maybe that's what you're seeing with gold and silver and other commodities. Next up, we'll talk about ETFs and market structure, Bitcoin getting packaged. Yahoo Finance showed IBIT among the top flow ETFs this year. I actually saw that chart and it was quite surprising to me. I think IBIT came in like at number 5. And I think what I saw was a list of the top 25 funds or something like that. And of course, it was the only one with a year-to-date loss. So that's kind of impressive too. Year-to-date loss, number 5. I don't know. This does mean Bitcoin exposure is now default, not exotic, and advisors no longer need to justify Bitcoin. They just need to justify not owning it. And then the question becomes, is it cheap at 88,000 or not? Next up, NASDAQ data shows expanding options liquidity around IBIT. Options introduce leverage, hedging, and reflexivity. Bitcoin remains neutral. Financialization happens around it. This mirrors gold and oil, not meme assets. From iShares and some BlackRock disclosures, IBIT scale confirms permanence. Funds at this scale don't disappear. Bitcoin is now embedded in the plumbing of asset management. The ETF era is no longer a phase, it's the baseline. Barron's covered Strategy's latest large purchase of Bitcoin, another $1 billion. This isn't about timing, it's about denominating the balance sheet in hard money. Volatility in the stock price is a feature, not a bug. They're engineering exposure, not speculating. Next up, Reuters reported MSCI wrestling with classification. And they were considering actually excluding Bitcoin-heavy firms from the indexes, which of course would crush those stocks because those passive flows would no longer flow to those companies. TradFi doesn't know how to categorize Bitcoin native companies. That ambiguity always appears before a new sector is formalized. And I think also Strategy wrote an open letter to MSCI explaining exactly what they are and that they're not a Bitcoin fund. They produce Bitcoin connected securities, bonds and preferred stocks and all that good stuff. So the debate will continue on into 2026. Another Reuters piece, though, showed no immediate index removal for Strategy from the NASDAQ 100. They retained their place in that index. This confirms rulebooks are lagging reality. Bitcoin is forcing new accounting and classification frameworks. Next from Reuters, crypto investors adopt more defensive postures. Less leverage, more risk management. This is not capitulation, it's maturity, and perhaps a reaction to getting a bit wrecked this year. Bitcoin doesn't need gamblers, it needs stewards. And again, if you're buying your Bitcoin and holding it in cold storage and dollar cost averaging, you can just watch all this from the sidelines, and it's entertaining, interesting, but doesn't really affect you since you're not getting wrecked in the market, trying to short, trying to go long, and getting blown out of your position and losing your coins, which people seem to love to do on a regular basis. CoinDesk reported long-term holder supply hitting an 8-month low. That's interesting. Now, this does not automatically signal bearishness. Often it reflects redistribution, tax planning, or internal wallet movement. Long-term holders are strategic, not static. Next up, we will cover mining and Bitcoin's physical reality. In an article from CoinDesk, they highlighted post-halving hash rate compression. Mining is where Bitcoin meets thermodynamics. Inefficient miners exit, efficient ones survive. This is not fragility, it's resilience. And of course, the hash rate is still quite high, and therefore the network is secure, which is what we want. And even though, gosh, the mining business is a tough business to be in because you have to get your power cheap, and that's what it's all about. And if the Bitcoin price drops, then you're just not making as much money. Bitcoin.com emphasized the protocol doing exactly what it was designed to do. No bailouts, no lobbying, no intervention, just math. Moving on to payments and Lightning, infrastructure quietly expanding. Tether leads an $8 million investment in Lightning payments startup. This is from CoinDesk. They covered this piece. Whether you like Tether or not, this signals demand for Bitcoin rails. Stablecoins ride on top, Bitcoin settles underneath. Bitcoin Magazine reported that BitGo is integrating Lightning. Institutions want speed without surrendering controls, and this is Bitcoin meeting enterprise reality. Next up, the Crowdfund Insider wrote a piece on custody evolving into payments infrastructure. Custody is no longer the end state, it's the gateway into Bitcoin native financial services. Next up, stablecoins and tokenization. TradFi adapts. We have the Wall Street Journal reporting that JP Morgan's move into tokenized funds. TradFi wants blockchain efficiency, not volatility. Bitcoin benefits indirectly as the neutral settlement layer. Barron's reported on Visa's expansion into USDC settlement for banks. Visa is rebuilding payments behind the scenes. Bitcoin doesn't replace Visa, it redefines what Visa settles into. Next up from Investors Business Daily, a piece on SoFi launching SoFi USD stablecoin. Banks don't launch products unless regulation is clear and there is a market. This is post-hostility, pre-normalization behavior, and we'll see where it goes in 2026. Moving on to regulation, the domestication phase. First article from Reuters, the UK sets crypto regulation timeline for 2027. Long timelines equal capital certainty. Capital certainty equals infrastructure. So good to see there. Next up, the Financial Times also reported that the UK FCA proposed some comprehensive crypto rules. The goal is domestication, not prohibition. Bitcoin doesn't need permission. Companies do. And as I like to say, you can't ban Bitcoin, but you can certainly ban yourself from Bitcoin. Moving on from Reuters, Coinbase adds a former UK finance minister to its advisory board. This is what survival looks like. Every successful industry eventually hires politicians to help ease the way. So, nothing surprising there. Some additional SEC coverage and industry reporting brings up that the SEC is issuing crypto custody investor bulletin. The custody clarity helps institutions, and it also reinforces the value of self-custody. So they're basically explaining to folks what that means, how you do it, that sort of thing. So good to see the government actually trying to educate as opposed to ban or sue in court, which was the prior administration's favorite approach. Next, we'll talk about security and the tax on complexity. An article in Chainalysis talks about crypto theft reaching $3.4 billion in 2025, which is a staggering number. But again, crime scales with liquidity, and almost none of this is Bitcoin protocol failure. The complexity is really the enemy of security, and at the core of these security failures is humans. So watch out for those scams. If it's too good to be true, it probably is. Don't keep your coins on an exchange. Keep them in cold storage. Don't share your keys. Don't even talk about the fact that you own Bitcoin. Don't wear Bitcoin logo apparel. Stay humble means stay humble and just stack sats. Next up from the block, coverage reinforces custody lessons. Each cycle relearns the same lesson. Bitcoiners already learned it, and new people are learning it today. And finally, market structure is the real story. And several articles here, Forbes, Messari, CoinDesk Research. The key items here are ETFs, custody, options, regulation. This is infrastructure season, and price will follow structure eventually. So again, be patient, which is part of staying humble. We took a look at the podcast this week. TFTC, what Bitcoin did, Citadel Dispatch, Rabbit Hole Recap, Bitcoin Audible, and Swan Signal, and came up with 5 themes this week. Theme 1 was Bitcoin as financial infrastructure. There was repeated focus on settlement, custody, and market plumbing. And that was covered in TFTC and Citadel Dispatch. Theme number 2, regulation as normalization. What Bitcoin did, and Swan Signal emphasized post-hostility frameworks. Theme 3, mining stress as proof of robustness. Rabbit Hole Recap covered miner economics and difficulty dynamics this week. Theme 4, market structure is more important than price. Bitcoin Audible and TFTC highlighted ETF flows and options markets. And finally, Theme 5, self-custody remains the core lesson. Almost every show reinforced sovereignty versus convenience trade-offs. Of course, there was an interesting podcast I listened to last week on Natalie Brunell's show, where she interviewed a estate planning attorney. And when you get into estate planning, there are trade-offs in order to enjoy some of the benefits of the fiat system in terms of trade-offs of custody versus having to trust a third party with your keys, which if you have an irrevocable trust, you pretty much have to give up custody of your keys to the trustee, who then is bound by the laws of the land and under penalty of being sued, imprisoned for not acting in a fiduciary capacity, which thousands of years of human civilization have developed those laws and practices. So it's an interesting one and definitely worth a listen, and also fits quite nicely with what I wrote about in my Bitcoin retirement and estate planning book, a lot of the same concepts that I've been using were talked about in the show. Irrevocable trust for everything that you have that you want to give to the next generation that you're not going to need. Revocable trust for everything else to make sure you can stay out of purgatory with the government on your probate when you die and all that. And lots of other good stuff too. So definitely check that one out. That's Coin Stories, Natalie Brunell. And I think it's like her most recent episode that she talked to this fella who is quite interesting, actually. So recommend that. Did want to talk about this week's featured Substack post. It's really kind of I would call it it's a two-part series, actually. So it's part one of a two-part series. And it was really designed to talk about a lot of the FUD. And so the first episode is really about some of the basic FUD. And then the second one is more about the more, I guess you would call it, higher level or more complex FUD. But again, the key items there is they said it was volatile, but adoption didn't stop. They said it had no use. Payments keep expanding. They said it would be banned, but now it's being regulated. They said it was a scam, but scams cluster around leverage and custody. So check that out. I will include a link in the show notes. And you can read all about that, volatility myths, utility, ban, and scam. And if you like it, please subscribe. It's free. And I'll also include in the show notes links to all the articles that we reviewed this week. Did want to mention also the books, Bitcoin Fortress, A Simple Guide for Beginners, Bitcoin Retirement and Estate Planning, which I just mentioned a couple minutes ago, and The Bitcoin Lifestyle, available in all formats in Amazon. Perfect for Christmas gift. And that about wraps up episode 195. Bitcoin does not need headlines. It doesn't need permission. And it doesn't need bailouts. It just keeps on producing blocks. And with that, I will see you all next week. And in between now and next week, it's Christmas. So if you celebrate Christmas, Merry Christmas. If you celebrate Hanukkah, tonight's the last night of Hanukkah. Happy Hanukkah and happy holidays. And I hope you enjoy the time with your family and have a great week. See you next week. That's all for now. Bye-bye.